Hello everyone and welcome to Investing Angles. In today's weekly digest, we'll discuss multiple items. First, we start with Volatility Index and dollar indices. After that, we will move to TLT and yields. Then we will discuss gold, GDX miners and oil in our commodities section. After that, we will move on to the major US indices and we'll discuss SP500, their sectors, large stocks like Microsoft, Apple, NVDA, Meta, and a few more. And we will end with our session with Nasdaq and Russell index discussions. All right, before we get started, please subscribe to our channel and support us with your likes and share the word around. Let's move on. The Volatility Index. This is the candle map for the index for VIX. And what we are seeing here is the very strong bearish closure of last week. First of all, the weekly candle is a complete bearish engulfing. On a 3-day frame, another bearish engulfing of a spinning top of a hammer. And on the daily frame, it's most likely a consolidation before moving lower. What is interesting here is that a 50 by 200 days moving average cross happened 3 days ago, and it is expanding, so the chances for move lower are fairly high. This would be a great technical support for the move lower. Now let's move on to the dollar index. So this is what we are seeing right now. The chance, this is the chart, technical chart that we shared with our subscribers on August 23rd. And what we said that this one, the technical map for dollar index is fairly similar to what we have seen at the beginning of 2018. And after this 2018, the dollar index rallied about 16%. So the chances for this one is somewhat similar. And so far, since our call on August, dollar is up 10%, which is about 2/3 of the initial target. So let's see if it continues. Let's have a look at the supporting information. So what we are seeing here is a candle map, and the daily frame is entirely bullish. What dollar has registered is the 100-day over 200-day moving average cross, and it's called a golden cross. So the chances for continued move higher are fairly significant. The weekly frame, at the beginning, it looked like it's going to be a reversal, but it ended up with just a consolidation candle. Most likely, it will go horizontally for a couple of weeks, and then it will continue higher. The 15-day frame is totally bullish. We have 6 green candles in a row, and the chances for the next one to be green is fairly significant. No concerns here. Speaking about the Elliott wave chart, this is the chart that we shared back in August, and the end of August, and this is so far gold dollar hit our minimum target, and the chances for wave 3 to be continued are fairly high, fairly significant. If you're interested in the bigger picture and more details about dollar index, look at our website for the weekly report that we posted a couple of days ago. Now let's move on to the bond section, and we'll start with TLT. So what we are seeing here is the chart that we shared a couple of days ago, and what we said that TLT has a good chance to form an impulse off the bottom. The only concern here is that the wave, the very first wave, is not clearly impulsive, so it could be a corrective wave, and that's why we have multiple perspectives here. Among them is the perspective of breaking an impulse if TLT follows the red path and breaks below 85.84. However, if it completes an impulse as shown in the blue path, that would be the first impulse of the bottom, and we would consider we would wait for another one after consolidating phase. So far, the very first wave is developing, and well, we are expecting the best. So if we look at the candles perspective, from the candle perspective, the weekly frame closed with a bearish, with a bullish formation here, and it's an inside up candle. The chances for the next week to be green are fairly high. The same for 5-day, which closed one day before. It's bullish, although it needs confirmation. The daily frame is somewhat neutral, so this candle can turn bearish or can turn bullish depending on the next one. So far, it's above the major resistance, major support points, and the chances for continued move down are fairly significant. And for those who are watching us for the first time, this is the monthly closure on December, and I would like to emphasize this bearish cross here, 50 over 200 months moving averages. They are fairly rare. This is the second time at all for the over 100 years, and the chances that it's not going to be reversed soon are fairly high. So the TLT is likely to go further down in the long term. However, it can bounce for the short and mid-term higher. And before, okay, so this is the yields. What we are seeing is 2, 5, 10, 20, and 30-year yields. And the daily closure on Friday was not entirely bearish, so it's more like bullish. And what we are seeing here is the classical ladder bottom formation. So the next candle is expected green and bullish. And the two-year yield already formed a bullish candle, and it's much stronger than every other yield comparatively. So that brings a concern. So if the two-year yield is marching higher at a higher speed, and the 10-year yield is still forming a bottom, so it means that the spread can turn negative in the foreseeable future, and that would be a very interesting development. We, by the way, discussed this possibility in our weekly report and on our latest video about TLT. So if you're interested, you can watch it on our channel. All right, so let's move on to the next topic, and this is gold. What is happening right now is metal. It's a very interesting story if we look at multiple frames from the candle's perspective. So first of all, I'd like to emphasize this daily closure on Friday. So it is a dark cloud cover, and it has a fairly significant technical support, and if it confirms on Monday, Tuesday, then it could be a reversal. And I circled here a potential 50 over 100 days moving average cross, which will be a bearish cross. And it looks like it's going to happen on Monday, no matter what. So the chances here are more bearish than bullish. Speaking about the weekly, the candle is kind of neutral. It can be either bullish or bearish, depending on the next one. So I would say it's bullish neutral at this moment, with slightly better chances to go higher. And the most interesting here is the 10-day frame, which has a strong bearish tower top formation formed back in November. And after that, we are seeing 6 attempts to break this bearish spell here. So far unsuccessful. However, if gold closes above this line 27.4996, then we will consider as a bullish move complete, and we will expect more higher highs, including all-time highs. However, if it is another failure here, the odds on this frame will remain bearish. Let's move on to the next chart here. This is our chart that we started. We called on November 1st, and we are tracking it since. So what we are seeing here is clearly a bearish frame, a bearish wave of the bottom in December, and it could be either a diagonal or just a clear plain bearish flag. So far, we are tracking two counts, the blue one, but the blue one could be invalidated very soon if gold moves above this top in December. Or it could be a bigger wave B here before before gold starts wave C, and it most likely will gonna extend right here and or even lower. So that's the possibility. We are not seeing any chances for now for continuing the bullish rally without hitting at least one lower low, which would be a red count. But if gold decides to move even lower, so then we could consider a wave 3 of a bigger impulse here. By the way, this formation is somewhat similar to what gold formed in 2011, 2012. It also was a strong impulse down and a very long multiple months wave 2 or B, and then it continued to go down. So that's a possibility of repeating this pattern. And if we look at the micro level, so this is the last wave that started in December. We are seeing that too many overlaps here, and it's impossible to treat this wave as an impulse. So it could be either leading diagonal or ending diagonal, but in both cases, we would expect the price to return to the level of origin, so somewhere 2580, 2590 in this range. Well, that's a possibility. Let's see whether gold makes another higher high before breaking it. But so far, we are seeing it as bearish. And from that perspective, it's the GLD could be a harbinger for this move, because it looks like it already confirmed the top on the daily frame on Friday. And it is somewhat similar to what it done in the middle of December before it started the second, the big wave down. So the wave on the weekly frame, it is bullish so far, but it can change. So we have bearish here, bullish here, and another bearish one on the 10-day frame. This similar formation that gold had, and another five attempts of failures. So if the next if the next candle moves strongly bearish here, it could even form a falling three methods on six candles. It would be a very strong bearish continuation formation with the chances to break through this important support line. Okay, so let's move on. This is all about gold and GOD. Let's move on to GDX. A couple of our subscribers asked for this update. What we are seeing here, the miners on the daily frame are bearish. I would even say strongly bearish. On Thursday, it's been a strong bearish engulfing. On Friday, the GDX tried to break the spell, but wasn't enough, and it formed only a thrusting line below the midpoint of the red candle, and this circled 50 over 200 days moving average bearish cross, or also death cross, is a significant event. So the chances for a move down are fairly high here. And then interesting formation on the weekly. I would say if not this red candle, this would be a strong bullish three white soldiers. However, they failed to close here above the high of this red candle, and I would say this is now more a setup for three following three methods for GDX. If the next candle is red and it engulfs this one, well, we will see a move down towards 32, 31 at least. And this is the 15-day frame, which is strongly bearish. This previous candle was strongly bearish, and right now GDX is trying to negate it. If, however, it's successful, well, that's the bottom. If not, then we would consider a move lower, much lower at this point. And from the Elliott wave perspective, this is the chart that we shared on January 4th, and with all original elements. I haven't touched it since. So that's our chart, the first wave down, impulsive. Then we have an ABC for wave B over 2, and there is a possibility that right now GDX is forming an impulse down. So this was the first wave. Consider this as a second wave, and maybe wave 3 is about to start. So far, that's what I am seeing, and this wave upward doesn't look impulsive so far. Okay, so let's keep this the original charting here, and let's move on to the next commodity, which is oil. Let's start with this bigger picture first. So we've been tracking this chart since December, and what I'm seeing here is a possibility that oil completed a very nice impulse here, and is about to reverse. So the reversal is not complete yet and not confirmed yet, but there is a chance. There is a chance. A little chance still remains for a move higher after this action, but so far I would say that the red path has slightly better odds. And this is the chart at the micro level. What I'm seeing from the top, oil possibly formed a very nice impulse down, 1, 2, 3, 4, 5. Clearly corrective wave up, wave 2 or B, and right now it has a chance or either form an impulse, or, well, this could be wave B2 if it doesn't close at the lower low. In this case, it would be an extended correction, ABC, or if oil moves strongly lower on Monday, Tuesday, and complete this impulse, then we might consider another impulse down. However, it could be a kind of zigzag type of wave down, and the lucky path scenario is a blue path here. But we'll monitor it on a daily basis, and we share it in our daily reports, all developments for oils. So far, we've been very accurate. Let's move on and see what candles are trying to tell us. So oil had a dark cloud cover on Thursday and Friday. This candle was bullish, but it neither confirmed nor rejected the bearish, the very first initial bearish attempt. If it continues lower and closes here, well, it's going to be a serious move because on Monday it's a closure for 2-day frame, and on Tuesday it's a closure for 3-day frame. So far they look bearish. We'll see if they continue this way, if the momentum stays. The weekly wasn't really convincing. If the body of this candle was bigger, I would consider it as a 3 white soldiers. However, right now it could be an advanced block. However, we need to see a strong reversal for considering it bearish. And the final for oil, this is like more theoretical stuff. This is a Brent chart, and what I'm seeing here is a resemblance between January 2020 and now, so exactly 5 years ago. So what happened then? Oil had bearish crosses of 50 over 200 and 100 over 200 weekly moving averages, and well, you remember what happened after that. So oil, uh, Brent plunged towards 15s, and oil futures, WTI, RCL turned negative. So I hope this doesn't happen this time, but well, the technical similarities are very striking. So what we are seeing, that oil challenged the 100 days moving average 4 times here, and the same here. The same is happening here with the forced challenges right now. So the candle here is weekly, and well, the chance has a chance to become a reversal one if we see a strong move. If we see a strong move on Monday, Tuesday, and January 20th is tomorrow. All right, so that's been all about commodities. Before we move to our major part, I'd like to introduce you to our website, investingangles.com. And right now we are offering a big discount for those who are interested in evaluating our charts and analysis. So for Ultimate Bundle, we are offering $19.99 per month for the first month if you use the code OIL discount code and apply it here. If you're not ready for evaluating but still would like to receive our charts and free articles, you can subscribe for a free reader subscription and get this access to our website, which we support many trading instruments, including commodities like gold, silver, natural gas, and oil. These are our regulars. Currencies, indices, major indices, US indices, and some global ones. Crypto, treasuries, TLT, US 10Y, and many other. So that's what we do. We have a live trading room for swing traders, which trades S&P 500 and SH, and video session, Discord chat, and many other things. So you're always invited to check and see whether it fits your trading style and your requirements. Okay, so now let's move on to the next session, which is market daily. So this is the indices. This is the indices, major indices closure on Friday. This is the weekly frames, and what we are seeing here is that S&P 500 and Dow Jones, they closed with very strong bullish continuation candles. Oh, bullish reversal candles. Pardon. This is bullish engulfing, and but Nasdaq and Russell, they formed only piercing lines. They are also bullish candles, but they are not as strong as the bullish engulfing ones. Okay, so we'll take a note on this and move to the next chart, which is the futures. So the futures have slightly different story. We have 1, 2, 3 bullish engulfings, including Nasdaq, and the Russell futures are very interesting here. So the weekly candle closed exactly at the opening of the previous bearish candle. So it's neither engulfing nor piercing line. So it could be a very strong bearish signal, but we would need to see a confirmation. So that's a fairly rare condition, but sometimes it happens, and in this case, you might see a strong move down. This is something to keep in mind. Let's move on to the next chart. This is a technical perspective from this is MACD. MACD on the 10-day frame. What we are seeing here is a freshly made MACD bearish cross. And initially, I thought that this cross is going to be somewhat similar to the one that S&P made in January 2022. But there is a chance that this one is the earlier one, the September one, which then was attempted and to reverse a couple of times, and it took 1, 2, 3, 4, 5, 6, 7, technically 7 candles or 7 periods for until actual reversal kicks in. So in this case, 6 periods, it's 60 trading days, which is like almost 3 months. So we might see a big rally here. Starting. Oh, it's already, you consider it's already started. So another like 5-6 weeks of a rally. That's a possibility, and that's a technical without considering any news and any noise. Let's move on to the next chart. This is our chart that we discussed earlier. So our concern was that S&P 500 might break this potential impulse of the bottom and move below 585, but fortunately it didn't do this. It recovered from the pullback and formed wave 5, which we consider wave 5, and now there is a very high chance that this wave will be continued upward after a possible pullback for wave 2, for a bigger consolidative wave. And this is what I would be looking for. This is the same. This is the bigger picture for S&P 500. I'm using futures. What we are seeing here is clearly 1, 2, 3, 4, and the potential for starting wave 5, which can continue for a couple of months easily. So wave 1 potentially done. Wave 2 needs to happen, and after that it will be wave 3, 4, and 5. Well, wave 5 can be an impulse or even more, or even a longer a diagonal wave. Well, that's the possibility right now, and we are seeing this as a potential target 64, 6600. Okay, so now let's move on to the next chapter of our presentation. These are the sectors. What we are seeing here is after a very strong bearish move last week, we had a total reversal for the financial, for industrial, for staples, for staples, no, pardon, for utilities, for consumer discretionary, and for energy. So technically these are expected to move higher next week. The consumer staples are, this is a bearish formation, this is a thrusting line, and the chances for a move down are, I would say, higher than the opposite direction. An interesting thing about XLK, about technology, so unusually weak. It's still bullish candle here. It's a piercing line, but unusually weak compared to the other ones, financial, for example, or industrial. And that's an interesting thing. We will see what the next candles would be. It might not be a total reversal, so we might see like a very minor candles here until a breakdown. But that's something to keep in mind, that technology is weaker at this moment. Healthcare is clearly bearish, so it's already had 4 candles within this body of this big red candle, and if it continues this ladder for another 2-3 weeks, well, that's fine. So, but the overall, this is a bearish flag being formed, and we discussed this earlier. So the chances for it to complete in the next couple of weeks are fairly high. All right, so from that perspective, from the sector's perspective, we are seeing that the majority of the sectors are bullish, and the chances for a continued rally or reversal are high. Now let's move on to the stocks. So the stocks also made a big change. So Microsoft, for example, formed bullish engulfing, and there is a very strong chance that it will continue higher. However, I'm not sure whether it's gonna hit an all-time high, and we are going to discuss it in a separate either in a separate video or as a feature to our daily stocks in motion. All right, so the Amazon is bullish, NVDA is bearish. It tried to negate this candle, but unfortunately it only managed to form this thrusting line. So the chances for NVIDIA to go lower are higher. Similar for Apple. Apple is also bearish. Google Alphabet is bullish and expected to go higher. The same for Tesla. And that would be it. So Meta is technically bearish because it tried to form a bullish candle here, but now most likely this is going to be a big setup for following three methods after this big candle. And the Netflix is also bearish, so it failed to cross the support line or resistance line, and now it's gets more chances for a move down. And you can review our video for Netflix last week. I think it was last week. So nothing changed there since then, and that our expectations for Netflix are quite bearish. All right, so let's now move to Nasdaq. This is what happening with Nasdaq, and what we are seeing here is that Nasdaq formed an impulse, and it was stick saved here just a few points above the line, the line of no return. So now we can consider this as a 1, 2, 3, 4, 5. Even though this impulse is fairly modest, I would say, compared to the one that Dow Jones or S&P 500 formed. We'll see how it works here, but nevertheless, an impulse is an impulse. And what the next potential move would be now this would be for wave 2, and then wave 3 would start somewhere here. So, and let me mark it with slightly different, yeah, like this. So this would be wave 1 of a bigger degree, and this would be wave 2. So I would expect Nasdaq try to consolidate before moving higher. All right, so that's the perspective for Nasdaq. I think that the red path can be removed for now. We'll see how it develops in the next couple of days. So that's the perspective. All right, so let's in the final discussion today will be about Russell. What we are seeing about Russell. This is the Elliott wave for Russell, and what I'm seeing here is that the very first wave of the bottom is incomplete. So it's at best it's 1, 2, 3, 4, and 5. So some might think that this is 3. No, this is not 3, and there are a couple of technical reasons for that. If you break it down into multiple waves, into subwaves, you can see that wave 1 is exactly of the same size of wave 2, which is unacceptable for wave, because wave 5 here is the highest, the longest, then this is a valid scenario for wave 3. So this one qualifies. So 1, 2, 3, 4, potentially 5. However, if we see a break below 2242.70, the impulse will be broken and an ABC structure will be in play. Whether it's going to be like entire ABC or it's going to be like A of a bigger ABC, it's yet to be known. But this is the perspective for now. All right, so now let's move on to the next chart. Okay, so the next chart for Russell is this one. It's a bigger picture. What we are seeing here is the wave. First of all, I'd like to emphasize the wave since October 2023 has been either corrective or a diagonal. There is no way, I mean, absolutely no way that this is an impulsive way. So, and there are a couple of potential counts here. So the very first one is a green one, which is possibly a bigger ABC formation. So A here in June 2022, B, and then wave C. What we are seeing here is so far there is a possible impulse down, wave 1 possible, and once we have wave 2, which is corrective, we can see wave 3, 4, and 5. That's another one possibility. Another possibility that this wave, that end of this wave in November was the end of the ending diagonal, and this is a blue count. So after a blue count, we would expect somewhat similar 1, 2, 3, and going down towards the low of October 2023. And another thing here, that this diagonal can be extended towards wave 5 here, and the index might make a new higher high, all-time high. In this case, by the way, the wave upward doesn't need to be impulsive. It's quite the contrary. So it has to be corrective. So generally, what we are seeing in the previous chart here. So even if Russell breaks an impulse and makes it a corrective wave, and it still has a chance, if it follows the red count, it still has a chance to reach the all-time high. The only thing that it would be in a corrective manner, and this would be another confirmation that we are looking for a diagonal, for an ending diagonal. So which could be something like this, for example, and well, in this case we would be looking for 2570, 2580, or maybe even more for completing it. So in general, diagonals tend to complete above this imaginary upper boundary. That would be a very interesting story. However, it would be technically aligning with the other indices. All right, so that's the possibilities right now. So I'd like to emphasize that Russell is different, completely different from the other three indices, major indices. And the chances for Russell, what it is telling right now us is that this diagonal or corrective wave most likely will reverse and will return towards October 2023 lows. That would be an interesting story. But mark my words, so this is the very strong possibility. And if we look at the candles, the Russell candles, the final one. So what we are seeing here is, again, so we discussed it already. So the weekly is different for Russell and for the Russell future. So it's closed exactly at the same line. The 10-day frame is bearish technically, and this current candle, it closes only in 9 days, so it can turn into anything right now. And so far, the previous candle was bearish. And the daily frame wasn't as convincing as the one for the other indices. We'll see if it goes higher here. However, Russell is very questionable, so there is no certainty at all about it. All right, so that's kind of wraps it up. And I hope you enjoyed this discussion about dollar index volatility, TLT, gold, GDX oil, and major US indices, sectors, and the perspectives there. So what, to summarize it, I would say that market signals a completed bullish reversal and the potential move to an all-time high at this moment. We'll see how it closes the day, Monday, Tuesday. It will be very important. And another thing to watch is oil. Let's see how oil behaves. If oil suddenly plunges and if it makes a big move, then we will see even more resemblances with 2020. But that's a very different subject, and we will discuss it in our daily reports. All right, so if you are interested in our services, visit our website investingangles.com, check for our free reader subscription, and if you want to evaluate our real services, then you have a discount, oil, capital letters, and it will give you $19.99 for the first week for all analytics that we offer. Other than that, support us with your likes on YouTube, share us, share the word around, and subscribe to our channel. Thank you very much for watching, and happy trading.